All right, I want to bring in Doug Flynn, a financial planner with Flynn Zito Capital Management. Doug, boy, do we need you this morning, because there is simply recession obsession here among investors and among consumers. Janet Yellen, the Treasury Secretary, says that a recession isn't inevitable. That was her message this weekend on Meet the Press. But Larry Summers, who used to have that job, said no, he thinks we're headed to a recession. There's no way to know who's right here, right?
No, there isn't. I mean, you can look at the last 6 times that the Fed has adopted a rising interest rate environment where they're trying to tame inflation and control interest rates. There's been 6 times since 1980 that they've adopted that. And 4 of those, we did go into a recession. So could they, one of them is going to be right, but it's a delicate balance, and it's difficult for the Fed to navigate just the right mixture of raising them enough without causing the recession. So it is, I would say, higher than likely that we're going to go into one. But just the 2 negative quarters of GDP, regardless of what the Fed, what people say about whether we're in a recession, people can feel it. Certain people will feel it sooner than others. Sure. And that's the key there, how they act with their money after that.
And look, it can become self-fulfilling too. When people are starting to obsess about a recession, they can pull back. But the banks are saying they haven't seen consumers really pulling back yet. My question for you, what are you telling your clients? How do you best prepare? We're already in a higher interest rate environment. That's already happening. That is here and happening, which means people should be paying down their high interest rate, credit cards. They should be paring down on their debt. They should be taking care of they get their financial house in order. What are you telling people to do?
Yeah, it's interesting. Most people are in a better financial picture than they had been in previous circumstances who are in a similar situation, because the Fed had pumped so much money out there and people have more cash than they generally have. And so what happens is people start to act differently when they run out of that cash. And I think that's why you're not seeing people act differently. But the key is this: if you're going to, you can't invest like you hadn't been investing during the different environment where rates were low for longer. You have to think that the Fed is walking a tightrope here, and you're going to have inflation higher than normal. Now, it may start coming down, but it isn't going to go right back down to 2% tomorrow. It's going to take some time. So inflation is going to be with us for a little longer, and that means you have to invest differently. Things that are in interest rate sensitive. You mentioned tech before. There are other assets that you have to watch that you don't want to be investing in when rates are higher and going up. You want to invest into areas that can do well, where they can raise prices and continue to have their earnings. Earnings are going to be the key. Who's going to execute?
We're in for a really big economic week. I mean, we got consumer confidence numbers tomorrow, a Fed meeting where the Fed is expected to jack up interest rates again. You're going to get a consumer inflation number on Friday. What do you think we'll learn this week? Will we have a better picture of where we're headed? I mean, I just keep hearing all this obsession over whether or not there's going to be a recession. We won't know when there's a recession until probably once it's over.
Right. You don't know you're in one until after, according to the government. The thing about declaring recession is there's 8 people who just decide whether we're in one or not. That has nothing to do with you and me personally and whether we're in a recession. And there's that old phrase of, when you lose your job, you're in a recession. And when your friend loses your job, when your friend loses their job, it's a recession. When you lose your job, it's a depression. And we're not anywhere near that because employment is still low. So it's a really weird situation. I think the key is that this is one of the odd years. I think it's only happened 3 times in history where there's a bear market in both stocks and bonds. Normally, your bonds are going to support you when your stocks do well. And so what we're looking for the information. Is inflation going to start getting down into the 7 with a 7 handle on it? We went over 9% based on the latest numbers. Is it going to go down to 8? Is it going to start moving down to 7? I think you're going to see a slower move downward. But if we get a higher number, that's going to cause havoc on the markets because we're just not expecting that. Yeah. That everyone is anticipating things improving a little bit on the economic front and on the earnings front. And so you just need to see a little bit of a trend downward as we start to get more of that information.
Yeah, the consumer mood here is just so bad. I mean, you've got gas prices trending lower, but nobody's talking about that. They only hated them when they were going up. They're not talking about on the way down. The consumer mood is really finicky these days. All right, Doug Flynn, so nice to see you. Come back soon. We'll talk more about where you should be investing now. Thank you.